Good morning, Checkmate crew. It is January 31st, 2023. It is Tuesday. We are airing about an hour before the market is opening. Sorry, guys. Today I have an emergency flight that I need to catch. So therefore, I'm doing today's episode a little bit earlier. And so if you guys happen to miss out, don't worry. As always, I'll put the video up on YouTube. Okay, so let's get right down to it. Okay, so pre-market right now, the markets are up. It was in fact down, I believe. Yeah, it was. It actually went down. I think it went down all the way, like I think about 1% in overnight markets, and then we're trying to recover right now. I think there's just a lot of hedging demand happening right now. I mean, we're seeing the VIX stay quite elevated, and if you think VIX is staying elevated, wait till you see the VIX9D. The VIX9D has just been going up and up. And staying elevated too, and it's just been a phenomena that we've seen now for about a week and a half or so, with the ER and the earnings season going, in full steam. This week will be the busiest week in earnings. So what I'm looking for is, I believe bulk of it is going to be on Thursday with Microsoft, Apple, Amazon, all that. So these big tech companies, they're going to be reporting their earnings, and so I think that we're bound to see a lot of action. Oh, by the way, don't forget tomorrow is also FOMC. So we got FOMC, we got tech earnings. A lot can happen. If we look at the spread between the VIX9D and the VIX, it is also staying elevated. And remember, I told you guys a couple of weeks ago, whenever I see the VIX9D and the VIX spread getting into the positive territory, that's usually when we start seeing pullbacks in the market. And we've noticed this actually for the past about 5 or 6 months. It's been actually a very good indicator. And again, I told you guys this about a week or 2 weeks ago. If you look back in the market memo, I had a segment on the VIX9D minus the VIX, that spread. And so we're noticing that spread is actually a pretty good indicator. If it's negative, generally we're seeing stable, a grinding up action in the market. But then once it pops over that and gets into the positive territory where the VIX9D is actually larger than the 30-day VIX, we actually start seeing a lot more back and forth movement and a possible pullback into the market. And we've seen that. We saw this move actually back on the 23rd, and I brought this up then on the 23rd or the 24th. So if you look back in the market memo during one of those days, that's when I went over this. But that was a predominantly a green day, and everybody was thinking that it's going to be stable. We're going to keep grinding up, but that's not the case. Now we're seeing a little bit of back and forth movement, and we're starting to see these larger candle wicks. Where moves get you start seeing bigger reversals in the market, a little bit more intraday volatility. And I think VIX9D minus the VIX, it shows us a very good indicator for that intraday volatility. Okay, so keep this on your radar, guys. And the more I study this, the more I think we can use this for intraday. I actually think VIX9D minus the VIX is actually going to be a lot more useful for you day traders out there. Okay, I'm not a day trader. Not in this environment at least. I like to day trade during very, very stable, low volatility markets, but if volatile market day trading is your thing, I think VIX9D minus the VIX is going to help you out a lot. Speaking of the VIX, let's also take a look at the VIX futures market. I think it's worth taking a look at. The futures market, actually, the contango has been narrowing. So that means the front month contract is going up relative to the back month contract. And generally, we also see more volatility around that as well. So let me get the VIX futures chart here, right there. Okay, so as you can see, this is the contango. This is the front month minus the back month. During upward markets, generally what we see is that it trends down. Okay, it goes negative, meaning the back month becomes greater and greater and greater, and the front month is going down. And the curve is the VIX futures term curve is pointing up. I've shown you this tool before, VIX Central. Okay, so when this is curving up like this, generally we're in more stable, upward trending markets. It tends to be that way. Also, it tends to be that UVXY and those volatility-based ETFs also decay faster when this is curving up. All right. Now, when it starts getting closer to zero or positive, that's when we start seeing backwardation in the VIX futures term structure. And that usually means there's a short-term risk that the market is afraid of. Okay, so we're actually seeing that this is kind of staying elevated. It's not quite positive yet, but it has been staying elevated like this. Generally, when we see this too, we have a chance at some short-term volatility. And again, with all the ERs coming out this week and FOMC tomorrow, I wouldn't be surprised if we see a little bit of volatility. All right, speaking of the FOMC, everybody's talking about the FOMC right now. Is the actual interest rate, story, is that what's causing all this volatility? I don't think so. Okay, I don't know why this is not loading. Oh, there we go. Okay, so if we look at this, all right, it's pretty much the Fed's funds futures market is pretty much pricing in a 25 basis point rate hike. All right, 99.8% of that is a done deal. Okay. What the market is afraid about, just because it says 99.8% for a 25 basis point rate hike and the Fed goes ahead with a 25 basis point rate hike does not mean that all of a sudden short-term fear goes out the window. That is not the case. What could happen is the after effect. So after the FOMC announcement, after Powell talks, what's the bond market's reaction to that? Okay, if right now in the short term, I don't think it's a mystery what's going to happen for this FOMC and the next. But I think what the bond market may be afraid of is when is Powell going to cut? Is he even going to cut? Okay, because right now the market is pricing in a rate cut at the end of the year. Well, what if Powell says, you know what, the economy is quite strong. There's no reason for us to cut rates. What if he says some type of signaling like that? I think that the markets could show some volatility with that, because right now, and we've talked about this for weeks now, guys, okay? As you probably are well aware, I like to look at things weeks in ahead and plan the things out 5 or 6 moves ahead. There's a common theme to that, okay? Generally, the people who've been in the markets for a long time and who've been consistently winning, they always like to look ahead and anticipate. We're not trying to tell the future. We're not trying to predict the future. We're trying to anticipate moves so that when they do happen, if they do happen, we have a plan. All right. But anyway, we've been talking about that yield inversion trade. OK, right now, it's a super crowded trade. Lots of hedge funds are longer dated maturity treasury bonds, like 10, 20-year bonds, and they're short the shorter term. All right, they're actually betting that the yield curve is going to invert further, and it's just getting more and more of a crowded trade. Okay, and basically that trade is the expectation that the economy is going to slow down. We're going to have a recession. Papa Powell is going to come and save the day and cut rates. Basically, that's what the money is betting on, okay? I think that trade is going to blow up in people's faces. Everybody's talking about a recession. Literally, everybody's talking about a recession. I just don't see it, okay? And if Papa Powell doesn't see it, then what's going to happen, And what if he doesn't cut rates? A lot of people are positioned for that, and I just don't think that that's going to be the case. I think this yield inversion trade is going to blow up in people's faces. If you look at the 5 and 2, especially on the 10 and 2, I don't know what's going on here. People must be out of their minds going after this. But again, that's just my opinion. I'm not going to trade based off just that opinion, but I do think, though, it's very likely we might see that yield curve inversion trade just unwind itself. And when it does unwind itself, I think there's going to be volatility in the markets. We're going to see the 10-year probably spike if that thing inverts. If that unwinds. If that thing unwinds, that yield inversion trade unwinds, we might see the 10-year treasury spike up just a little bit. And if that happens, we might see some of the outperformance in the tech and growth sector to kind of reverse. And so actually, wow, we're already seeing that. Look at this, guys. Look at this. Remember, I said that, we might catch a bid, and I think we did. Remember, between January 20th and 24th, we saw huge bids and outperformance in the tech space. This is IVW versus IVE. The IVW is growth and tech stocks, ETF divided by value stocks. When this goes up, it means tech and growth is outperforming. When it goes down, it means value stocks are outperforming. So right at that tech selling time, look at that, just like clockwork. Literally 30 days after we saw those big block sales in December, we saw tech outperformance. So I told you guys, those of you who were short tech stocks, I told you guys to be careful, because that 30-day institutions, this is how institutions position themselves, okay? What I try to give you insights on is what the big money, the big institutions are doing, okay? And right on cue, right after that 30-day wash sale rule, boom, they went back into tech stocks. Now we're seeing this is pretty, that's a pretty big drop right there. This ratio doesn't really make those it can make those sudden moves, but this looks like it could be the start of a reversal back down. And if that's the case, we might see value stocks outperforming again. And, with this thesis, if this were to come down, what could send this down is a spike in the 10-year yield. A spike in the 10-year yield will force this back down again. Okay, so watch out for TNX, especially if you guys are long tech stocks. You might want to really keep an eye on this, and start cutting losses if it gets too hot. So that is what I see at the moment. And right now too, also, if you look at the dollar, doesn't the dollar look like it wants to kind of bottom here? I'm still long those UUP calls. It's just like a miserable situation to be in, but it is what it is. I'm just hedging my Quad U shares. Quad U has been doing well. Some of our positions have been doing extremely well. So no complaints there, but I would love to see a spike in the dollar. I'm not gonna lie. I'd love to get out of those, cash out those hedges, and buy some more of the dip. I wasn't aggressive enough in my buying, and I wish I had been. But, it is what it is, okay? It's always important to manage risk. So I would like to see this spike. If we do see a spike, I'd love to cash out of my UUP hedges. UUP is the ETF for dollar longs. I'd love to get into that. If that goes up, I could see silver coming down. I could see gold coming down. That would be wonderful. Again, I am just patiently waiting. Ooh, look at that. GDX is going to gap down. I'd love to see GDX come down just a little bit further, maybe into the 27, 28s. And again, guys, I've been saying this. I don't know how many times I've been saying this. Silver ETF. Really want to see that silver ETF go down to closer to $10 a share. Would love to get into that. Barrett Gold, also another one. Oops, I forgot. TradingView puts gold as a different symbol. Yeah, I'd love to also see Barrett Gold come down. One of those. Whichever one gets to the value level first, boom, I'm going to get into some leaps and get some poor man's covered calls on that. Okay? Would love to get into that. Next. So that's that. I also wanted to talk about crypto, as we always do. And crypto is getting a little bit more interesting these days. We're seeing open interest go up. We've been noticing that year to date for January. Notional value is creeping up again. We're at $6 billion in Bitcoin. And so we're getting closer to the highs in Bitcoin. Last week's weekly, the 27th expiration was a pretty big OI, open interest expiration. So we saw a little bit of a dip in the notional value of the open interest, but it's creeping back up again. Something that we've noticed for this year is that the ETH notional value is still not as high. Something that was the opposite from June till end of year 2022, we saw ETH notional value, open interest on options higher than Bitcoin's. And I think a lot of that had to do with the merge anticipation. And right now ETH also has that Shanghai update where you can withdraw staked ETH. I know one of our very enthusiastic crypto traders, MSC, he's been he mentioned a couple of trades. One was the staked ETH trade. Right now there's a little bit of a discount on staked ETH, and so that was a potential trade he was looking at. Also, he brought to my attention that Lyra or Lyra, I don't know how you pronounce this, but Lyra or Lyra, which is one of the options protocols, AMMs, the automated market maker protocols, they are opening up a market maker vault where you can put your funds in to be used for options market market making. And I actually put some money into this. Okay. This seems very interesting to me. I do think that when it comes to crypto, as crypto market matures, we're going to see a lot more derivatives coming out from the crypto space, especially options. I do think that as institutions get more and more into crypto, most likely they're going to want to hedge using options. And I think options activity will just increase over time for the cryptos that end up staying. And I think Bitcoin and Ethereum probably have the best chances of sticking, through ups and downs for the next few years. So we might see an increase in those options activity. And again, what better way to participate than to share in some of those market making fees. And I put a lot of position into this. So I think in about a day or so, we're going to start making some yields on this. And again, it's just a lotto position for me. I have it in this Lyra, and you can go to their Twitter page and look for the link yourself. But here's the link here. So I put a little bit in there. Let's see what happens. Okay. As far as block trades are concerned on Darabit, I didn't notice any big block trades, although around opening time of the New York Stock Exchange, we start seeing some larger block orders coming through. Let's see if there's any block trades worth mentioning today. Look at that. There is a little bit. What is this? The buying of the 1550 put. Remember, we saw a lot of short volatility, long volatility. For ETH, I believe we saw a sold call spread last week. And then for Bitcoin, I think we saw some strangles being sold. I do notice that DVol, which is the implied volatility, has been bottoming out and going up. And it's kind of, right now, DVol is I think is trying to bottom out. It bottomed out. It kind of went up in the end of December. And then now it's kind of pulling back down, trying to make that higher low. Let's see what DVol does. And if volatility just keeps going up, then that might get very interesting. We might see, open interest really go up then on Bitcoin and on Ethereum. And so if we see that, we might be able to get some insights on price action based on the options positioning. But until I see that OI go up, it's really hard to use that effectively. Okay. For Bitcoin, let's take a look at Bitcoin. There's some forward skew. So there is a little bit of risk taking, especially in Bitcoin. And that's something we've noticed for 2023 is that we're seeing some risk taking in Bitcoin. It looks like, are there any block trades worth mentioning? Oh, look at that. 6-figure block trades. Whoa, we're getting way more. Remember from about 2 weeks ago, we started noticing a lot more 6-figure trades. Look at that. It's increasing. We're starting to see increased risk-taking in the Bitcoin options market. This is very interesting how last year it was opposite. From June to the end of the year, it was Ethereum where we saw this. Now we're seeing this in Bitcoin. Very interesting. I wonder if there's something coming up in Bitcoin. I wonder if there's a Bitcoin halving. Is that happening? I don't know. I'm going to have to ask some of you more crypto natives to tell me a little bit of a timeline that's going on. I do know that I saw something on Twitter about the Bitcoin halving, and I think it was Michael Saylor that put it. Anything he says, I usually take with a grain of salt. But maybe the halving is happening soon. So maybe that's what some of these options traders are anticipating and seeing. We're seeing some action around that. Are these spreads? Let's see what's going on here. Ooh, that's a spread. What's that? Buy, put, call. Oh, look at that. That's a strangle right there. So they're buying strangles. That's a bought strangle. That's for $343,000 and premium that was bought. Unless something got sold to offset it, but I don't see it. But then again, you know, this Deribit doesn't, for non-account holders, it doesn't make it easier. They don't make it easy for you to do this. I wish they made it easy, even for non-account holders, to go through all this stuff, but they don't. Oh, and they just stopped allowing U.S. corporations from doing this too. So I was going to open up a Deribit account actually this year with one of my corporations, but I don't think I'll be able to do that. Oh, is that a spread? 26.18, 26.18, 26.18. So there was a buy on the February 32p, 23,000 C. 23,000 strike calls. 26.18, 24,000 buying of the puts. That's a very odd. So you're buying a put that's further dated, but you're buying a shorter dated call. No, you sold it. So they sold a shorter dated call to pay for some premiums. But there's another sell right here too. So selling a call, selling a short dated call and put. So you're shorting short-term volatility and you're longing the downside volatility further dated out. That's interesting. So, but there's another buy here. You're shorting. Okay. So now I got a better picture. So you're shorting a straddle for February 3rd to pay for a strangle for February 24th. Interesting. So short-term volatility, they're shorting short-term volatility to pay for longer-term volatility. So basically, they're shorting the 7-day D-vol and longing the 30-day D-vol. Shorting 30-day. Actually, I wonder, is G-vol... I wonder if that was my timer, by the way. I got to catch my flight. But I'm too curious now. Hold on. G-vol. Let's see here. G-vol. Come on, baby. I don't know why it's taking so long. I don't know why it's taking so long. Okay, I don't know why it's taking so long, but volatility, realized volatility. Let's see. Options, Deribit. Yeah, I think this is it. This is it right here. Bitcoin. Yep. Okay. So I believe we can compare the 7-day and the 30-day on this, right? There is somewhere where we can do that. Yeah. There's a place where we can. I know there is. I know that they allow you to do this. I know they do. Give me a second, guys. Give me a second. Okay, I'll have to find it later. But right now they're shorting the 7-day D-vol, but they're longing the 30-day. So we'll see how that happens. I'll try to find a graph of that, and I'll show you guys tomorrow what that looks like. Okay. So, all right, then in that case, do you guys have any questions, comments, rude remarks? Oh, wait, one of our crypto natives, the surgeon, the doctor in the house, Bitcoin halving is next year, I think. Next year. Okay. So maybe this is just risk taking in crypto then. Maybe this is just a little bit of risk taking. Anything else, guys, that you want to see before I go? I got to catch a flight. So sorry, guys. Sorry that this is such a rushed thing. I got a call from for one of my business contacts, and there's a last minute flight that I have to catch. But I will be back on tomorrow and on Thursday. It may be a different time, but I'll let you guys know. I will still do the market memo. I wouldn't do that. I'm gonna stay doing the market memo no matter what. I'll put up an episode, whether it's end of day, beginning of the day. I'll find a way to get it out there. Okay. Anyway, if that's it, then in that case, that wraps up our session of the morning market memo. Our Discord invitation link is in the video description below. Come join our Discord, be a part of our growing community. There's no sub fees, no paywalls, of the people, by the people, for the people. And if you enjoyed our video, hit like, follow, subscribe, comment, show us some love, baby. All right, I'm going to be back on tomorrow and the day after. Again, I'll try to be on 30 minutes after the opening bell of the New York Stock Exchange, 10 a.m. Eastern time. But if I do have to change the schedule, I'll let you guys know. Hope you guys have a wonderful day. Trade safe.